What if I told you that everything you believe about gold is a carefully crafted illusion? While banks hoard it by the thousands of tons, they tell you it's a barbarous relic. Why the contradiction? Stay until the end, because what I'm about to reveal will change how you see money forever. Before we expose the truth, smash that like button and subscribe, because this information is too important to miss. Quick legal note, this video is for financial education only. I am not a financial advisor. If you decide to buy, sell, or invest in anything, gold, stocks, crypto, whatever, do your own research, make your own decisions. This is information, not advice. Now let's get into it. Here's the paradox that should make you question everything. In 2023 alone, central banks purchased over 1,000 tons of gold, the second highest annual purchase in history. The top buyers? China, Poland, Singapore, Turkey. Nations preparing for something. Yet mainstream financial media constantly tells retail investors that gold is outdated, doesn't produce yield, and Bitcoin is the new gold. Why would institutions buy something they claim is worthless? Simple. They know something you don't. Let me hit you with some uncomfortable facts. Fact number 1. Every single fiat currency in history has eventually failed. The average lifespan? Just 27 years. The US dollar has only survived this long because of the petrodollar system established in 1971. Fact number 2. Gold has maintained its purchasing power for over 5,000 years. An ounce of gold in ancient Rome could buy a fine toga and sandals. Today, a quality suit and shoes. The value remained constant. The currency changed. Fact number 3. Gold cannot be printed, inflated, or debased by governments. This is precisely why they moved away from the gold standard. It limited their ability to create unlimited money. Now for the secrets they desperately want hidden. Secret number 1. Paper gold manipulation. The gold futures market trades 100 to 200 times more gold than actually exists physically. Banks sell paper gold, promises of gold they don't have. When everyone tries to claim physical gold simultaneously, the system collapses. This suppresses the real price. Secret number 2. The reverse correlation. Play. Notice how financial institutions bash gold during market highs. They're accumulating. When retail investors panic sell during crashes, institutions buy. It's the oldest wealth transfer trick in history. Secret number 3. The coming reset. Central banks aren't hoarding gold for nostalgia. With over $35 trillion in U.S. debt, $300+ trillion in global debt, and central bank balance sheets exploding, they're preparing for a monetary system reset. Gold will be the anchor. Why do governments and central banks really hate gold ownership by citizens? Reason number 1. Control. Fiat currency is the ultimate control mechanism. They can freeze your bank account, impose negative interest rates, or devalue your savings through inflation. Gold? It's outside their system. It's your wealth, truly owned. Reason number 2. The inflation tax. When they print trillions, your dollar loses value. That's a hidden tax on your wealth. Gold exposes this theft. As money supply increases, gold prices rise proportionally, making the devaluation visible. Reason number 3. Financial independence. A population that stores wealth in gold doesn't need to keep it in banks. Banks can't lend it out, can't create fractional reserves with it, can't generate fees from it. You become financially sovereign, and that terrifies the system. History proves they'll do anything to control gold. 1933. Executive Order 6102. President Roosevelt criminalized gold ownership, forcing citizens to surrender their gold to the government at $20.67 per ounce. Then they revalued it to $35, instantly transferring wealth from citizens to the state. 1971. Nixon shock. The U.S. unilaterally canceled the dollar's convertibility to gold. Why? Because France and other nations called their bluff, demanding physical gold for dollars. The U.S. didn't have enough. 2013. Cyprus bail-in. Banks seized up to 60% of depositors' funds. But physical gold? Untouchable. The pattern is clear. When systems fail, they come for your financial assets. Except gold. Today, they've gotten smarter about suppressing gold. Tactic number 1. The ETF trap. Gold ETFs seem convenient. Exposure to gold without storage hassles. But you don't own gold. You own shares in a fund that claims to hold gold. In a real crisis, good luck getting physical delivery. Read the fine print. Tactic number 2. Crypto distraction. Bitcoin is digital gold, they say. While crypto has merits, it requires electricity, internet, and faith in computer code. Gold needs none of these. It's been the ultimate hedge for 5,000 years, not 15. Tactic number 3. Opportunity cost. Fear. Gold doesn't pay dividends or interest. True, but it's not supposed to. Gold is insurance, not investment. When everything else collapses, insurance pays out. Pay attention to what's happening in 2024-2025. Signal number 1. BRICS. Nations are creating a gold-backed trade settlement system directly challenging the dollar's dominance. Russia, China, India, Brazil, South Africa, representing 45% of global population. Signal number 2. Central banks are repatriating gold from foreign vaults. Germany, Poland, Hungary. They want their gold home. Why? They don't trust the system anymore. Signal number 3. Mining supply is declining. Peak gold production may have already occurred. Existing mines are depleting, new discoveries are rare, and extraction costs are rising. Basic economics, demand rising, supply falling. Signal number 4. The derivatives bubble. Over $1 quadrillion in financial derivatives, bets on bets on bets. When this implodes, where will safe haven seekers run? History shows that every major monetary reset creates a massive wealth transfer. Those positioned in real assets during the transition become the new wealthy class. Those holding paper promises become the new poor. We're not talking about getting rich quick. We're talking about preserving wealth through the transition. Consider this. If gold were to back just 40% of global currency supply at current prices, the price per ounce would need to be approximately $15,000, $20,000. Some analysts suggest even higher numbers. Whether that happens or not, the point remains. The entities with gold will have real leverage in the new system. The entities without it will not. This is why central banks are accumulating. This is why billionaires hold significant gold positions despite what they say publicly. This is why the ultra-wealthy have been doing this for generations. I'm not telling you to buy gold, that's your decision. But here's what you should know. Knowledge number 1, physical versus paper. If you own gold, own physical gold. Coins, bars, held by you or in a private vault you control. Not paper certificates, not ETFs, not futures contracts. Knowledge number 2, the 5 to 10% rule. Financial advisors historically recommended 5-10% of portfolio in gold as insurance. Not 100%, not 0%. Balanced protection. Knowledge number 3, long-term perspective. Gold isn't about daily price movements. It's about preserving purchasing power across decades. Think in generations, not quarters. Knowledge number 4, the system won't warn you. By the time mainstream media says buy gold, it's already too expensive. The wealthy accumulate during quiet periods, not during crises. Gold is not risk-free. Here are the realities. Risk number 1, price volatility. Gold can drop 20 to 40% in value during certain periods. From 2011 to 2015, gold fell from $900 to $1,050. If you need to sell during a downturn, you lose money. Risk number 2, no passive income. Gold doesn't pay dividends, interest, or rent. While you hold it, it generates zero cash flow. Your money is tied up with no returns until you sell. Risk number 3, storage and security costs. Physical gold requires secure storage, home safes, bank vaults, or private facilities. These cost money, plus insurance, plus the risk of theft. Risk number 4, liquidity challenges. Selling physical gold isn't instant. You need to find a buyer, verify authenticity, and you'll often sell below spot price. In a crisis, liquidity can dry up completely. Risk number 5, counterfeit risk. Fake gold bars and coins exist. Tungsten-filled bars, gold-plated fakes. If you don't verify properly, you could buy worthless metal. Risk number 6. Government confiscation. It happened in 1933. It could happen again. Governments can and have made gold ownership illegal and confiscated it at below-market rates. Risk number 7. Opportunity cost. Money in gold isn't in stocks, real estate, or businesses. During bull markets, you miss gains. From 2009 to 2020, the S&P 500 massively outperformed gold. Risk number 8. Tax implications. In many jurisdictions, gold is taxed as a collectible with higher capital gains rates than stocks. Know your local tax laws. The point? Gold is a tool, not a miracle. It has a purpose, but it comes with real risks and costs. Anyone who tells you otherwise is selling you something. Here's the ultimate truth they don't want you to know. The financial system as we know it is built on confidence, not fundamentals. The moment that confidence breaks, people flee to what's real, tangible, and proven. For 5,000 years, that's been gold. They bash it publicly while hoarding it privately. They call it barbarous while filling their vaults. They say it's obsolete while making it the foundation of their reserves. Actions speak louder than words. The question isn't whether gold has value. 5,000 years and every central bank on earth have answered that. The question is, why don't they want you to own it? Pause for dramatic effect. Because financial sovereignty is power, and they'd rather keep that power centralized. Now you know the truth. What you do with this information is up to you. If this opened your eyes, hit that like button and subscribe for more content they don't want you to see. Knowledge is the first step to freedom.